Welcoming in Joe Bishop-Henchman, Executive Vice President at the National Taxpayers Union Foundation. Thank you so much, Joe, for coming on.
Good evening. Great to be with you.
Glad to have you here. So we have a new report showing massive fallouts for states, families, and businesses if the Tax Cuts and Jobs Act is not renewed.
Yeah, we looked in to see if Congress fails to act by the end of the year, the automatic tax increases that will take effect. We wanted to look not just at how that will affect different types of taxpayers, but also different states around the country, because the effects will not be the same across the board.
And what did you find?
Well, if you're in a high tax, high income state, you'll certainly notice the tax increases if they take effect. But even if you're not, lots of states adhere to the federal tax code, even in their state tax codes. So, for instance, about half the country follows the federal government in how much tax-free income you can get every year in the standard deduction that 90% of taxpayers take. And if the Tax Cuts and Jobs Act expires, that standard deduction will fall by half, which means nearly every American will pay more in tax. And then for the states that follow the federal rule on that, it'll not just be increasing your federal taxes, but also your state income taxes too. So that we're really worried about at NTU.
So you know what's so unfair about that is that the amount is so low. When you say the standard deduction, that's tax talk. But I like the way you termed it initially. You said the amount of money you can make before you owe any tax. The amount of money you can make before you owe any tax should be the amount you need to live on. The amount that it takes for you to live on, right? That's what you get tax-free. Then anything you make above that gets taxed to pay for services, because that would limit government. Government would not feel that they're owed such a huge amount of what you earn on an annual basis, because they would be limited to after you've spent money on your own expenses, the amount, your standard deduction based on your own style of living and or the average style of living for someone in your state, your age, your income bracket, whatever. Just it would be a different way of thinking.
I couldn't agree more. And it's one of the big reforms that we got out of the TCJA in 2017, the tax bill in 2017, because the standard deduction used to not even be at poverty level, the amount that you would earn without having to owe any income tax. TCJA brought it up. Right now it's about $25,000 for a family or for a married couple filing jointly. Which maybe it's still too low, but it's going to fall by half if we don't act. And lots of states follow that too, of course. In addition to what I do at NTU, I also help people with their tax returns every spring. And I still get a lot of people bringing in all of their receipts and all of their expenses and everything. And for 90% of taxpayers, you don't need to do that anymore. You can just take this larger standard deduction. That didn't always be, it used to be the case. And if the tax cuts expire, we're going to go back to that system. And, maybe people feel like they get a little bit more savings. You don't, but maybe people feel like it when you're bringing in all your receipts and your account has to go through it. But it also adds compliance costs, because you have to pay the accountants, or you have to pay your online software, or whatever you do to help you do your taxes. And we actually did a report on that too. Just this one change saved taxpayers about 1 billion hours a year. And we'd really hate to go back to that. Yeah.
And then there's the fact that if you use that system, you have to keep all of your receipts. You actually have to keep all, either in your software or in your personal accounting system, however you are tallying all that up. You have to keep track of it. The larger deduction means you have less of that to actually look at, unless you're filing for a business, and then you have different software anyway.
Exactly. Yeah. The change in 2017, it used to be 30% of Americans were itemizing, that is, having to list all of their receipts one by one, and that's now less than 10%. because it's more advantageous for most taxpayers, for over 90% of taxpayers, to take the standard deduction instead, the more generous standard deduction.
So what else?
So that's one thing we looked at.
That's just one thing. I know you guys took a much deeper look.
Yeah, so we looked at the estate tax, which is the bill in 2017. It doubled the amount of estates that are exempt from the estate tax. That will go away. That will fall back by half if the bill expires, and there are a couple states that still have estate taxes. Most of them have been repealed at the state level, so we just have the federal one to worry about for most of the country. But in those places where they follow along with the federal government, that's going to be problematic. And then one is a sleeper issue that most businesses are aware of, small businesses are aware of, but maybe not most taxpayers. And it's this policy called full expensing that was adopted in 2017. So when somebody who owns a business buys new equipment and spends money on it in 1 year, instead of having to spread and delay those deductions over a number of years, full expensing allows them to deduct it in that first year. And it may not sound like much, but it eliminates this distortion that we had between the accounting code and the tax code. And it made sure that investment wasn't literally penalized, a literal tax on investment. It took that away so that it would encourage it. I think it's no surprise that when we had this policy, 2017, 2018, 2019, we had a boom in investment and new purchases of equipment and business growth and job growth. So we'd really like to make sure that that policy doesn't go away. And a couple of states liked it so much they've adopted it for their state income tax too. And so the federal government really, we really shouldn't let that go away because it's an important growth engine for our economy.
All right, so everybody's all ticked off about the tariffs, but the real deal, because the tariff negotiations are going to be ongoing, and there really isn't anything we can do to impact that. The decision to vote for Donald Trump meant you were voting for renegotiations on tariffs, but the Tax Cuts and Jobs Act, Biden ran on and then was replaced by someone who ran on increasing taxes, allowing the TCJA to expire. President Trump ran on extending the tax cuts and even making them permanent. So much work to be done. I saw there was an announcement by Speaker Johnson. He said he doesn't think they're going to meet the deadline that President Trump has set of getting this done by May, the end of May.
Yeah, there's a lot of meetings happening in back rooms, not a lot of voting. The real deadline is December 31st because if it's not done by then everybody's taxes go up January 1st. About 80% of Americans will see a tax increase January 1st. Hopefully we could get it done a lot sooner than that. I don't really understand why Congress takes so long on things that they do, but they need to be hearing about why this is a priority and they need to get it done. And they really shouldn't have to, maybe they will leave it to the deadline, but, it'd be nice if they did. It'd be nice if they got it done earlier.
Yeah, it'd be nice if we weren't talking about this in December, the Christmas month, when we're supposed to be thinking about cooking and laying around and eating and spending time with our families, buying Christmas gifts. There's so much to do at Christmas. We don't need to be thinking about this. It'll be such a downer if this is still going on.
Or even worse, if they kick it into the next year and they say, oh, well, we can just, people don't file their taxes till April, so we have until April. I mean, I've heard this before, and we've got to make sure that doesn't happen. And especially if we're going to have economic disruption from the trade negotiations, providing some certainty about the tax code can be a real positive economic boost, a real economic shot in the arm to show that we're serious about economic growth.
Yeah, I agree. I think the fact that we have all of these things going on at the same time, plus the continued prognostications on all of the social media sites about how we're teeter-tottering on the brink of bankruptcy. So let's get some, economic growth going in there. Like everybody get on the same page and let's work on this thing instead of the constant fighting. And I feel like there's so much nonsense going on.
Yeah, and we could really look, I think, a lot to the states, maybe not every state, but some states really have their act together. The legislature comes in, they're there for 30 days or 60 days or 90 days, they pass the budget on time, it's balanced, they get done, and they go home. And the tax bill in 2017 really provided an economic boost to state governments. It not only expanded the tax base and created economic growth, which found its way into state income taxes and state sales taxes and state business taxes, and enabled a lot of states to see a revenue boost that a lot of them used to cut their tax rates. The reverse can also happen. If it is December or January or February and we don't have a tax bill, the reverse could happen, where we could see economic downturns and less revenue going to states, and states having to claw some of that back. And we really hate to see that.
Yes, that would be, again, completely unnecessary and not a good thing for the country. So is there anything else we need to know? I would recommend that people visit the NTU.org. There's some really good key takeaways here. Anything else you'd like people to know and kind of chomp on as they're considering this information?
Well, your representatives in Washington want to hear from you on this. They don't think enough that this is a priority. I mean, we're debating all sorts of other things and focused on other things. This deadline of December 31st, we didn't create it. Congress created it in 2017 when they passed it initially. They had it expire at the end of this year. And not everything needs to be left to the last minute. So hopefully push them to get this done and make sure that we provide some certainty for everybody.
Certainty. We'd like some of that. We'd like some certainty.
It'd be nice.
It'd be nice. It would, and what's wrong with being nice? Like, is there a kind of a moratorium on niceness? How about the elected officials give us something nice for 2025? The renewal of the TCJA, some expansion, make it permanent, and give us an opportunity to do some great things. I would love that. We really appreciate the work of the National Taxpayers Union, and I encourage you, if you have not been there, to their website, ntu.org. This particular article has key takeaways that you could copy and paste into a text if someone is kind of arguing with you a little bit. Maybe it's your family group chat. I know sometimes they can get political, and someone says, oh, the TCJA is only for the rich. There's great points here. The federal taxes, it tells you what happens exactly with the TCJA. It gives you the consequences for taxpayers, for businesses, for state governments. It talks about recommendations for state lawmakers, and then it goes into detail, and there's charting and graphing here going on. This gives you an opportunity to tell a person who thinks you maybe don't know what you're talking about that you do know what you're talking about, courtesy of Joe Bishop-Henchman and NTU, which you can go to ntu.org. Thank you so much. I'm grateful for this. I'm printing one out for myself.
Thank you so much. Have a great night, and hopefully